Okay, good afternoon, guys. It's half past the hour now, so I think it's probably time we got started. My name's Steve Ruffley. I run TraderMaker.com. So today we're going to talk about real-time charting. I spend a lot of time in the markets, and a lot of the questions I generally get from people are, what's the perfect setup, what should I be looking at, and what do professional traders use? Well, in all fairness, professional traders use setups like I'll be using right now. So from my perspective, throughout the many years of being on different trading floors and being a risk manager, etc., etc., people like to set up the charts in their own way. And there are no real correct way to set up the charts. They can be as individual as you are as a trader. Now, obviously, there are direct and inverse correlations in different things we trade, but this is for us to find out what works for us. We all trade the products we're doing in our own style and with our own unique kind of perspectives. Again, we all like our different setups. Some people like white candles, some people like green and red candles. Doesn't really matter. That's all fairly irrelevant from my experience. What we need to understand is what we're looking at, why we're looking at it, and again, what other traders are looking at when they're looking at levels, patterns, etc., and what we should already know. So the whole thing about the market is it's a self-fulfilling prophecy. People always ask me that, or remark to me that if I know something somebody else doesn't, I've got the edge in trading. I kind of look at it in a reverse. If I know what everyone else is thinking, that's my edge, because they're either right or they're wrong. There's nothing new in the markets. There's no hidden formula, no secret technique to making money. It's just understanding how you're interacting with the market, how you're interacting with other traders, and how you profit from that. And charting is information. Okay, any of these screens we look at, they're just charts. They just go up, they go down, they go sideways. It doesn't really matter what the product is. They're all going to exhibit some sort of price structure, and it's always going to be between support and resistance. That will never change. So as long as we understand the charts and understand how we set them up and how we use the information to the best of our ability, then that's when we're going to make the money out of trading. So what it's going to be today, it's going to be a bit of an open session. We haven't got that many attending today. There's only 16 people showing. So really what I'll rely on today is your questions. I set up my screens in a certain way. I can tell you where key points of support and resistance are in any product in real time. Not many other people can do this. This is because I put everything I have over my 10 years of trading the markets into my own unique setups and systems. So if you're struggling with a particular product, you don't understand where support and resistance could be, you don't understand why the price is exhibiting the particular style or the particular direction it is, then let me know. Let's talk through it. Again, I don't want to spend all this session just filling in time and just talking for the sake of it. That's not why I do these webinars. I've done hundreds and hundreds of webinars. I've been doing the circuits for a long time. So I want to bring value. I want to answer the questions that people are finding difficult. People are not understanding their market, or they're finding it difficult to trade FX pairs, indices, commodities, whatever it is. Just ask me any questions and we can let you know. Okay, we're going to get some questions through now. So Philip is asking, do you use sloping trend lines, support and resistance, and chart patterns? Yeah, absolutely, but only when they're valid. One of the biggest mistakes people make is trying to overcomplicate the chart and to put as many oscillators, to many things as they can over the charts to try and get extra information. In my experience, the best way to look at charts is to keep them simple. So, okay, let's take something completely at random. Okay, I'm going to open up the US CAD now, so just give me 1 second to do that. Okay, so we open the US CAD now. So what can we see from this chart? Okay, well, we've seen a down move, the market's come back up to almost this level here where these green lines are. That's almost like, you know, again, a swing level. Then the market's continue to move, this gradual move upwards. So what patterns will we draw in here? Well, again, we could, I guess, draw in a simple trend line. But what's that really going to tell us? It's quite, excuse me, like that. So we draw a trend line maybe from this low here. What's that really telling us? Okay, that's a level of support, but it's quite a steep level. Again, when we talk about level of support, but this is really kind of at a 45-degree gradient. So that's not really telling us a great deal. So what we can look at is look at what the levels of support and resistance are telling us. So these levels of support and resistance are significant levels from previous highs and lows. So this is a 4 hourly high going back to that particular date. So that's significant in the market. So it doesn't mean they have to exactly hold for support and resistance. What these levels give us is periods or points of attraction. So as we see the market hits this high here, and we see this candle with this long wick, that's showing that the market tries to aggressively push higher and doesn't, closes back down, and then we trend along this 4 hourly high that was printed back on the 9th, on the 26th of the 9th, over here. All around it finds support, market goes up, can't break resistance here, finds support, 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 and then breaks down. Then we start hitting these key levels. So they keep working. Okay, we keep finding support, 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 breakthrough. Yeah, support, again tested on the upside, breaks through, resistance, support, support, and the market moves back higher. That's how we start to need to building up our charts, but then looking at other conditions. So patterns, that's something we should look at. But levels, weekly, daily, monthly levels will not change the actual point in the market. They will only change, again, in respect to what time frame we're looking at. Okay, so any more questions? Let's take some more. Steve, do you take the view that support and resistance are the most important thing in any market? Okay, Mike, yes. I definitely think support and resistance lines are the most important thing because they don't really change. Okay, you can have a support that's broken, but then it becomes a level of resistance. What I look, and the way I describe support and resistance lines, is that the point of significant attraction. So if a level of resistance gets broken on the top, it doesn't mean it's not valid within the market. If that's a weekly level or a monthly level, that's taken time to reach that point. So we have to understand what the market's thinking when it hits that level, and if it supports it and the market moves down from it on the upside, then that's a significant level. If it breaks through it, why is it broken through it? Is it some fundamental news? Is it a fundamental shift in what people are experiencing in that market? So what I like about support and resistance lines is that unlike other patterns, they're always going to be on your chart. Again, when you look at charting patterns like maybe your pennants, your trend channels, all the things I've taught over the years, and still do teach, they have their place, but you have to understand how you're trading them. You have to wait for these patterns to emerge and then understand what they do. You know, how they react once they've been held and adhered to, or if they've been broken through. So for me, support and resistance lines are the best ones to trade from, because they make your charts nice and clean, and they don't really change. They're always going to be on your charts. So yeah, good question. Okay, so another question. A steep trend line breaks, it's more likely to break from sideways consolidation or a break back in the opposite direction. How can we decide to trade it as a break or decide to stay out? Great question, Philip. Well, again, the steeper the angle of the trend line, like you said, the more likely it is to break out. But what we have to understand is, what is it breaking out for what reason? It's just a trend line. Okay, just because you draw a trend line and it hits 2 or 3 points doesn't mean that everyone else in the market is looking at it. A steep trend line that I draw on the US CAD, then nobody else is going to draw in because it's not really relevant. So what you want to look for is building up your charts and your chart patterns around things that people think are worthwhile. So we'll go through some charts in a minute and try and find some worthwhile examples. Okay, I will go back to your questions in a minute, Mike. Let me just go through the questions in order, so we keep some structure to this seminar. So the best thing is, if you want to stay out of trades, then you want to stay out if other people aren't looking at the things you're looking at. So if you see a head and shoulders pattern on a daily formation, that's more likely other people are going to see it. It's a daily high time frame pattern. It's well known in the market, and it exhibits something that everyone can trade from. The head and shoulders will have a neckline, it'll look to be broken, and that's when we see the correction. If we're trading steep trend lines, then that's something we're not going to see a market reaction to. If they break through, it won't be because of that trend line, it'll be because of something else. What we need to do is draw sensible chart patterns, sensible trend lines that the majority of people will be looking at. So again, it's always important that we draw our trend lines on the bigger time frames. Draw them on your hourlies, on your dailies, and these are points that you're looking to get to. Remember, you can trade trend lines and breakouts of trend lines in different ways. If you know that a trend line has been drawn in and is, again, a point of attraction, you can trade it in 2 ways. You can trade everything down to or up to that level of support, that level of resistance, that trend line. You don't have to wait for it to bounce or break. The whole point is, when you're trading any kind of breakout, is making sure the market has momentum behind it in order to break out. So does it have the volumes? Are you seeing large candle solid bodies, red or green, to indicate the direction of the market? If we don't see that, then the likelihood is, if we hit trend lines, they're going to be supported, and they're going to act as that support, act as that resistance. They won't break through. So the whole point of your question, just to answer that really in a short statement, is that if you don't see the volatility and you don't see the volume coming in towards that trend line, it's likely it's going to hold and not break through. So you either trade it as a holding level or a breakout level. If you don't think the volume's there to break out, look for it to hold or stay out, depending on what your trading strategy is. Okay, again, I know we're all fairly new to this system, so the administrator is just telling us again that we can answer questions in the Q&A session rather than the chat window. Again, we're all getting used to this system. It's still fairly new, so I'll just try and ad-lib it as we can, guys. So let me just get back to the questions. I can see that we're moving down. Okay, Mike's asking again, and when do you set your bias? When would you change your bias? When do you decide to step away and let things develop? Okay, right, let me just minimize the chat window and let me talk through how I look at screens. I'm going to put you on one of my setups now. That's going to tell you these things. So give me 2 seconds, guys. Okay, so this is my standard setup. When I'm going to be looking at the charts, I always trade a 15-minute chart on an hourly bias based upon my daily, weekly, monthly levels. Okay? So if you look at the screens now, I'll talk you through it. Now, all these lines that you see, significant lines, are monthly, weekly, daily highs. We have some swing failure levels in and some other little clever products that have been put in. But basically, this is telling us where the market is looking for value. Right? Now, what I can see, let's take a product, okay, let's take the dollar versus the Japanese yen. So I know what my overall bias is on the weekly time frames, the monthly time frames, and the daily time frames, because I've programmed this in. So I know from the monthly perspective, the market's bullish. From a weekly perspective, the market's bullish. From a daily perspective, the market again is bullish. All the candlestick formations are telling me we've got bullish momentum coming into the market. So I know my weekly levels, my monthly levels, my daily levels, and they're already in play. So how do we trade off this? Well, then I go down to my 15-minute time frames to look for an opportunity. So let me just maximize the 15-minute chart now to show you. So what we can see from the chart is we're seeing significant levels of support coming to the market round about here. So around about 79.204, there's 3 lines printed as significant support, okay, or maybe resistance if we're coming up from the bottom. So what we know that the market is looking for bullishness, okay. The market is looking for buys. So anywhere where the market sees value, the market's going to get bought up and look to hit these highs. So what we can see from the charts here is the nice level of support. Okay, we see 1, 2, 3, 4 15-minute candles. Yeah, find some good support around about 79.147. Yep, so the market has moved down. Some support. Okay, we haven't found any. See it here on our level here. And then once the market has found some good support and consolidate, the market comes down. It goes up, down, up, and then the momentum carries on in that bullish direction. So we've got 1, 2, 3, 4 good candle prints. So these dotted lines are swing failures, okay, so they're other points of attraction within the market. Here at 79.297, so that's where the market. Another good strong resistance level at 79349. So that's where I expect the market to get to. So by using these levels of support and resistance that we draw in, we can see where the market's been and how it's reacted. Okay, especially here, found good support. So the market finds good support again where the market is trading here. So that's how we start to build up our charts. So it's good to leave your lines in of significance because you then use them to trade from. So again, let's go back to the overall setup. Yeah. chart. The hourly chart is telling us 1, 2, 3, 4 selling candles. We have a negative confirmed breakout, so the market should punch lower. It doesn't punch lower, it can't find our low levels here of support down here, so the market reverses and starts to go higher. So in that candle, we'd like to see a close. I'd like to see it support at 79209 on the hourlies, and I'd like to see it hit 79357 on the high side. So we're going to range between these support and resistance levels, but we do that. Then looking at it from our hourly view, and then the smaller time frames. Okay, guys. So a lot more questions coming through now. I'll try and keep up with you. Okay, Jack's asking, how do you select which direction you'll bet on, long or short? How can you buy low, sell high? Okay, Jack, well that goes back, again, to where we're finding value. Now you can find value in different ways. You can use it from the ATR, the average trading range, or maybe you can overlay your moving averages, yeah, or use it with something like perhaps Bollinger Bands. So again, I'll demonstrate this on a chart. Give me 1 second. Okay, we have an hourly chart here on the euro dollar. So where is value? Okay, well we're trading currently at 100% of the hourly trading range. Okay, so that tells us that we've got room to play with. The overall monthly bias is up, the weekly bias is up, and the daily is undecided. So what's value on this chart? Okay, well let's insert some simple studies. 1 second. Sorry. What I would tend to use is maybe a simple 20 period moving average. Okay, so where's value? Okay, well the moving average is in the middle red line. So we're trading below the moving average. Okay, so we know the overall bias on the higher time frames is we're looking for the market to go up. The daily is undecided. So what we're seeing here, where value is towards the low end of the Bollinger Band. So we're trading below the moving average. We try to sell down to our levels of support, at significant level of support here at 1.30548. Okay, so we found support, and we broke through, and we've got our levels here, our swing failure levels that we're touching on. So if we start to close on the hourlies above the lower end of the Bollinger Band here, that's where value is. I would be looking for longs when we close inside that Bollinger Band. If we want extra confirmation, when we get above that level I just talked about, the 1.30548, if we close above that, then I would look for this level to be tested here. That's another daily high, okay, a significant level, which is just on the moving average. Okay, so then we should start to be buying up from these levels here, looking to here. If the market then closes above the moving average, we look for our other levels to be tested on the high side. Significant breakout level here. Okay, at 1.31040, and we will then close above the moving average, so longs come into the market. So that's how you build bias. If we start closing below the low end of the Bollinger Band, then again our targets are the low here and the low here. We have two levels of support here, all the way down at 129936. So we're starting to look at value as in the overall picture. The higher time frames say we should be buying, based on candlestick formations. However, the hourlies tell us that we're trading below the moving average and we're trading to the low end of the Bollinger Band. So we're either going to find value buying low here and it up, or again, if we start seeing significant breaks down, maybe there's some new fundamental information in the markets, or the trend has just changed and then we're looking for the markets to push down and fill these gaps here. Okay, hope that makes sense. A question, see what else we have. Alright, hopefully that's answered your question there, Jack. Mike's asking for all the questions above. Let me just read them, Mike. Okay, so thanks for doing this webinar. So your H1 time frames is your strategic time frame, and the other ones you're looking for. Yes, absolutely. So what we always look for is the monthly, weekly, daily overall bias and the direction. and then we look for the hourly time frames. But what the hourly time frames do is that I trade off 15-minute charts. So if you trade off a 15-minute chart, every time you get a close, you're getting a bit of information for that 15 minutes. When you get 4 15-minute closes, that then gives you an hourly signal. That's how I build it up. I build it up from the high time frames downwards, but then I trade in the opposite direction. 15 minutes to give me hourly closes and hourly biases. Okay, so that's how I set it up. If you're trading off 5 minutes or smaller time frames, you're going to get too many signals. And this is a mistake a lot of intraday traders make. They try to trade too smaller time frames over too many periods and over too many products, and you get too many conflicting signals. So look at your 15-minute charts, get an idea of what the hourly bias is, and then trade up to them hourly levels. So I hope that's answered your questions, Mike. That's how I trade. Okay, so what else do we have here, guys? Do you trade the strongest and weakest, strongest versus weakest currencies every day for trend, or do you trade regular FX pairs no matter what? Okay, good question, Mike. Again, I have particular setups because I know what correlates and what doesn't correlate. So again, if we look at our time frame majors here, I generally have the S&P because that's my good basis of risk, to be honest. I mean, I know the S&P is a good indicator of the dollar, etc. Then we have the euro dollar here, which again generally moves in the same direction. And we've got the pound and the Japanese yen that generally all should correlate in some way. So we can see from the charts here, okay, we're the lows of the S&P here, but we're seeing a bid come into the euro dollar, a bid come into the pound, and a bid come into the dollar against the yen. So again, guys, we're seeing our levels tested here. Okay, so it's we know the overall bias was up, so we're looking at low points on the chart to buy value, and then the market starts to hit them. So again, it isn't coincidence. And again, I'm not saying I'm a trading oracle, I'm certainly not. I've just drawn in sensible points of attraction for the market, and we're going with the overall trend. So the overall trend is buy, buy, buy. The market is going to reverse, but we only make money when we get involved round about here. But if we know in the hourlies and the higher time frames the bias is bullish, when we're hitting our levels of support down here at 79,130, all we're doing is looking for longs. So we're long from there, happy days. We've got all this money, it's profit to play with. Get involved in the market. We know there's a lot of resistance and support, 3 levels of attraction here, around about 79206. So we start breaking out those significantly. Buy into it, and look to where your targets are on the high side. Okay, if this market's going to continue, this market is going to get to today 79347. That's my call. Not because I'm a trading guru or a trading genius. That's just a likely point the market's going to find resistance. Great questions, guys. Again, keep them coming. Okay, Tom is asking, Steve, how can I get these software drawings, highs, lows, and whether it's incline bullish or bearish? Well, this is my setup. This is what I use. This is my 10 years of knowledge put into automated trading. There are options that you can have this. Again, I'll get all your email addresses after this. I mean, if you Google Steve Ruffley and Trader Maker, all the things that I offer and all my services are obviously on them websites, so that's what you need to do. Again, I don't use these as sales pitches, guys. You know, all the things I do are free and they're educational, so we can talk about anything like that afterwards. But let's keep to the system. Let's keep to any questions about things you're struggling with, guys. If you've got a particular currency pair that you're struggling with, tell me, and let's look at it. Let's look how I'd set up the chart and how I trade it. That might give you a better idea of how I trade. Okay, so yes, Mike, I don't generally put moving averages on charts, to be honest. If I'm struggling to find an entry point, I'll overlay a simple 20-day or 200-day moving average to see where we're trading in value. But no, I don't really use the moving average, to be honest. But for Bollinger Bands, that's the same thing, to be honest. Okay, Mike's saying, yes, can we see the euro versus the Japanese yen? Of course we can. Okay, let's set it up now. Give me 2 seconds, guys, to show you how quickly I can do this. As long as I can find it. Okay, so that's a basic MetaTrader chart on the hourlies. Okay, what we want to do is find support and resistance and where value is. Let's see how quickly we can do that. Okay, well that's pretty quick. What I can see is on the euro against the yen, the bias on the monthly is bullish, bullish. On the daily, today it's negative. So that could work in our favour. So the market moves down on the daily, I'll be looking to buy low. So I see significant points of support down here, 103, spot 128. Again, a lot of resistance down here, support down here. So the market's going to find it pretty tough to break through all these levels. So I would look for buying opportunities at 103,021. And I wouldn't see a major break today, certainly below 102,785. So start to build up the picture, guys, right? This is an hourly chart, right? So each one of these candles is an hour's trading. So if we see the market in an hour's move from here to here, it's not likely, to move any further than the biggest candle that we've seen printed. Okay, we're towards the afternoon of the session. It's a Friday afternoon, so we're not likely to see big movements in single candles. So today, I would see if the market is going to continue moving up, we would see the market hit 103,782. And we might find a nice range between 103,280, and that's where the market could range between. So if you want to look at that in a 15-minute, okay, this is a clearer picture. If we want to put a simple Bollinger Band on to give us some understanding of where we could find some value, again, just use the standard MetaTrader setup. Okay, so we're trading right. Okay, this is a great example. The market's moved down on the 15-minute chart. We know that overall higher time frames are showing us that we should really be looking for long-term bulls. We find support down here. We see a double bottom here. Okay, let's just put our crosshairs on. The double bottom here on the chart on the 15 minutes of 103 spot 201. The market starts to move higher. We break inside the Bollinger Band. So we find support, support. Where does the market look to test? Okay, we see one single candle here. It looks to test the midpoint, the moving average. Okay, I didn't know that was going to happen, but again, all the things I teach you from experience. So the moving average, you'd expect this key level here, this red line at 103,624 as a good protection. Next, keep careful. 03712 ties in with the top of the Bollinger Band. That's how we're building our charts up, guys. That's how we're real-time trading. You know, again, it seems very simple in hindsight, but what we see is when we're talking about candlestick, it's like moving average. We find support here. You know, we have good levels of support here. So this will point for the market. It's going to continue this upward trend, which again is our monthly and weekly bias. Until that's up, guys. So that's again just taking a random chart, overlaying my basic levels of support and resistance, looking how we're trading with the Bollinger Bands, and looking for intelligent points of where the market can test. Okay, I think that's a really great. Okay, guys, brilliant. So that's great, Mike. Anybody else? All right. So the Aussie Euro dollars are paying to trade only below the 401 hourlies. Okay. Well, let's take a look at that. Okay. Let me just open that up now. Give me 1 second, guys. Let's trade the Aussie against the dollar. So we have the Aussie against the dollar. So let's look at it on high. Okay, 4 hourly. What does this tell us? Okay, well it tells us that. Okay, let's just do it as a very good. Let's double bottom here. Some nice support at 1.01598. Market finds support. Market move distance support. So we're going to draw in simple trend lines. Let's draw them in now, and let's see what my setup tells us. So on the 4 hour resistance. We find resistance. Okay, so that's a nice overview of what we're looking at. So now if I put my my charting package over here, okay, well what does that tell us on the 4 hourly then? Yeah, it almost ties in. Yeah, well that happens to be a low on the dailies, so that ties in. That low is now resistance. Yeah, so the overall bias monthly is down, weekly it's up, so contradicting, but daily it's down. So again, we'll be looking for support levels to then become resistance, and the market, as we can see, is exhibiting on the 4 hours a nice channel, a nice downwards channel. So a nice good upward movement here. So the market's found a downward channel. So what we could look to do is put a channel into place here. So if we do not break down our key levels of support here, then maybe we'll see a continuation. The market will move up, a downward channel, hit support, and then bang, we start to hit here at 103.897, and again our key level indicated in red is 104.296. Okay, so that's what I'd be looking for. Let's look at how it looks on the lower time frames. So on our hourlies, again a lot of support and resistance here. Yeah, every time we've got up high, we don't see big fat bodies, we see wicks. Can't break higher, can't find that upward momentum, we come down, resistance. Break up here, can't break up, resistance, it comes down. Then the market starts to move lower, but it's quite gradual. Yeah, we don't see an aggressive move down. So I'll be looking again to maybe find some areas of support around here, and the market to range or move and test these levels that it's tried to test again. Okay, so it's been significant. It's tried to break through, it couldn't. It's tried to break through, it couldn't. But then conversely, it's not really aggressively moved down and touched any of our key levels of support down here. So you'd see the market range, yeah, and maybe it does test down here, but I wouldn't be looking to sell into that. I'd be looking for that to hold as support. I'd be looking for the market to find support here, and then test these levels up here. Okay, so again, go back to your 15 minutes, your smaller time frames. Yeah, again, this is just zoomed in. We can see, again, the market's aggressively tried to move up, can't, move down lower. Tried to move up again, couldn't even make a higher high, moves down. So the emphasis here seems to be that when we're higher up, the market wants to sell down. So again, that's how you build your time frames, build up your views of the market. So if the market does build momentum when it's going up, then you either buy when you start breaking up above these levels, yeah, and look for these higher levels to be tested, or you wait for the market to get up round about here, yeah, or a little bit higher, maybe our last point here, 1.04078, and then sell into that. Because the likelihood is when it reaches here, it's not going to break higher, it's going to sell. So it's about being patient and understanding what the market's telling you. So hopefully that's clear. Questions, guys? Okay, Alvin's asking what indicators drawing support resistance lines. Well, these are just daily and weekly and monthly lines and other lines that I program in, so they're automatically generated. Okay, Jack's asking a question now. Do you only use candles to get monthly biases, like a firm breakout up? Well, what these do, okay, these give me an understanding of what's happening. Candlestick patterns I didn't invent, okay? I didn't invent candles, and I can't always rely on their and be able to spot them. So what I do is I understand how the candlestick formations over a set period of time and what they're telling me. So what I'm telling you is that on a weekly bias, yeah, on the S&P here, from the candlesticks that have been formed in that week, that is a net negative selling scenario. Okay, so it's just an indicator. It doesn't say the market's going to go down on the week. It just tells me that candlestick formation that's been printed, yeah, is a negative one. And we all know our candlestick patterns. You can Google candlestick patterns. They're all available for everybody. Yeah, I don't change them. I just put them into a manageable view that tells me monthly, weekly, daily, what the markets are thinking. This data's already been printed. It's already been given to me. So I can use past data to predict what could happen in the future. But then we have to use our support and resistance lines, our trend indicators, our Bollinger Bands to reinforce this. Okay? Alright, great questions, guys. I can see some questions come through on the chat window now, so let me just expand that a little bit and see if we can answer some of these. Okay. Okay, so how do I see the Aussie against the dollar moving in the next 2 weeks? Okay, yeah, let's have a look at that. No problem. Catherine's asking the same. Let's go to that again. Let's bring the Aussie against the dollar up again. Just do it quickly, 1 second. Okay. See the Aussie, but look over the weekly. Okay, so what do we see? Okay, the market's towards the top of the range now. Okay, sell-off, the market's recovered, found a bit of support, and then carried on, and now it's ranging. Okay, there's certain things we can use when we're looking at weeklies. Fibonacci. I love Fibonacci. It doesn't always work, but it works really, really well. So we see the down move here. So it's not exactly perfect, unfortunately, like I thought it was going to be. But when we see a significant move, 80% of the time, a big move will be retraced to 50%. Market moves down, found support down here. So where's our 50%? Our 50% is here. So the market retraced, not bad, to 50%. Yeah, and we generally find good support. So we find good support here. So when the market is going at this big aggressive down move, the market over a period of time eventually retraces to 50%, it finds support, the market moves up. As it comes down, it doesn't touch the 50%, but it gets near there. So that's again support becoming resistance, and the market moves up higher, beats and breaks above the 100% retracement, and then makes this higher trend. So again, we find good support on the overall top of this move. So that's just a quick example of what could happen in the future based upon the previous downward move. So that's a simple Fibonacci, that's dead easy. So what's going to happen, in my opinion, over the next 2 weeks? Hopefully my time frames. Okay, well this is a weekly chart, remember, so let's go into the monthlies. Let's see what the monthlies tell us first. Monthlies tell us, okay, we've seen that down move, seen support come into the market here, the market's recovered, 100% retraced that downward move, broke higher, and every time it tries to hit, this top here, right, the market does break lower, but not significantly for any amount of time, so 0.98478 becomes a major level of interest, and we use it as support. Okay, so every time the market doesn't significantly break lower than that, we buy. Market goes up, breakthrough, market goes up. Okay, so what's the market going to do in the next 2 weeks? Well, it's going to continue to move higher. It's going to get to a very nice level, 1.099999. If it breaks lower, it's going to hit 0.98478. Okay, so that's your overall monthly levels. Okay, so take a screenshot of that if you want. That's where it's going to hit over the month, I guarantee it. So we break it down to your weeklies. Tells you the same thing. Okay, support down here, resistance up here. Yeah, let's trade it on the dailies. A bit more of accuracy. Okay, so we've seen a nice big strong move. Okay, so that could be a bull flag. Okay, on the dailies, see the strong body here being the pole. The market's moved down in a regimented fashion. Yeah, if we don't test a retracement of this bar, the market could then aim for 103.888, and again we see all these gaps here. A lot of upward side movement to these 4 levels. These levels are drawn on because they're significant. Okay, if they weren't significant, they wouldn't be on my chart. Excuse me. To range and either find support, significant support here, or look to test these levels up here. So anywhere above 1.04730, that's resistance. Okay. So that's what I see in the next. What's going to happen in the next week? Okay. I think we found significant support here, then the bottom. So the market is going to is recovered. Yeah. And again, let's do a Fibonacci on that daily. Let's see what that tells us. Up move. Well, there we go. Not a coincidence, guys, is it? Right? We're finding the key level of resistance here at the 50%. So I would look for the 38.2% to hold. Yeah, that would be in a nice line with this Fibonacci retracement. I'd look for the 50% here to be tested and then be seen as support and resistance. Then the 61.8 hit, and then eventually a 100% hit. So I think the market finds support here, and eventually is going to be trading up here in the next 2 weeks. That's my call, based upon what I've just told you. Questions? I hope you're starting to build up how I use charts and how I use support and resistance with other tools. Any more questions, guys? Yeah, I mean, again, I don't program these myself, to be honest. I have people and teams of people to do this for me. But all this stuff's readily available on the internet. We can build our own programming. But we've all got access to the same information, guys. It's just how we use it. If you want to draw highs and lows, monthly, weekly, dailies on your charts, you can do it. Yeah, we just gonna have to spend time doing it. I've just programmed the system to do that. And again, there's more clever programming that, you know, I've been looking at charts for 10 years, so there's things that I see that I just use. But having a setup like this means I can quickly see the biases, go into smaller time frames and make money. So again, all the market's telling me on the hourlies and the higher time frames, you start buying the dollar against the yen. When we see low here, around 79, well, we just start buying. And the market does the rest. Complicated than that. Yeah, I mean, some of the support and resistance lines are based on past fractals. They're based on, again, different time frames, highs and lows. The swing failures, etc., and things like the dotted lines are all based upon different formulas based upon candlestick patterns and what's happened. But again, it's all mathematical things. You know, if you overlay Bollinger Bands in your candlestick formations, it's the same things, just presented in a different way. Okay, guys, any more questions, any more thoughts? These are quite unique sections, again. They're based upon my experience, based upon my setups, but you can see how quickly we can gain information from the markets by setting up the charts in the right way and having a quick set of indicators to overlay. But the key point of these lessons always is to have setups that work for you. Don't just stick lines onto your charts willy-nilly and expect them to hold and not understand why. Build them up from your higher time frames and then trade them on your smaller time frames. But make sure they're relevant. Don't just keep trading off 5-minute charts. They'll give you too many conflicting signals. Okay, is it possible to have indicators, i.e. support, resistance, and up-down arrows on the top left? Yes, it is. Yeah, of course. But yeah, these are things that I program in. You can have them. You know, they are available. But again, what you'll have to do is come to me. So at the end of this webinar, guys, I do get your email addresses. So I'll send you my contact details, and if you're interested, maybe I'll send you some free setups. You know, some things you can download and use within MetaTrader. Again, I use all these things for educational illustration purposes. You know, they're meant to show you how I've put in physically into lines and into charts my 10 years of trading experience. It just makes it a little bit more digestible for people. Okay, guys, we've only got a few minutes left. I'm mindful I don't want to go over my time limits. Is there any final questions you'd like to ask? Can we look at EU? What's an EU? Arvind? Do you mean the euro? Do you mean the euro dollar? Yep. Okay, euro dollar. Okay. Here it is in our hourlies. So what does the euro dollar tell us today on our hourlies? Well, like I said, found some support down here, and then the market then breaks above the lower end of the Bollinger Band. I'd expect the next key level to be tested would be 130704. So look how the market on the hourly acts. If we then close around that region and above it and above the moving average, I'd expect the market to move up. If it doesn't, again, we could see the market range and then move towards the lower Bollinger Bands and back to support down at 130398. Okay, so keep the hourlies up and see what happens. Trade off the hourlies or paper trade off the hourlies. See how it builds up. Okay, I can see. Just again, the market's looking to move up, it's moving slightly downwards, so I'd see more room, to be honest, on the upside. And the weekly and monthly biases are telling me there's more room on the upside than there is on the downside. So look for shorts, look for support levels to buy into. That's my call on the euro dollar. Okay. Also, Steve, basically, you start drawing your lines on the larger time frames and then charting off the lower time frames and then keep on drawing. Yeah, exactly. But only draw levels when they're significant, when they're of interest. Don't draw them on because you can. Keep your charts as clean as you can. No worries, Mike. I mean, again, all your feedback is very, very positive, guys. Again, these are fairly new sessions. I don't hold them very often. So send to Vicky and Maud, the moderators, the guys, ideas. If you want me to trade, or paper trade, or show you specific currency pairs, tell me in advance and I'll set up the screens to show you. Remember, I trade live account money. So I back up my education with a live money account. So that's the way I back it up. I don't do these things for the fun of it. I do it because it's educational and helps people, but also back it in live trading scenarios. Alright guys, well, Google Steve Ruffley, Google Trader Maker. I'm all over the web. You can't not find me, so you can always get in contact with me. Again, I don't use these as sales. I'm not like that. All my education is free, so I do it, again, to help you guys and to show you the benefit of my experience. Right, guys, well, I think we've really come towards the end of the session now. Catherine's just asking, do I use pivot points? Generally not. Again, if you use a moving average, that's just as good as pivot points, to be honest, Catherine. But there's no point. Well, there's no harm in putting the pivot points in. They'll just give you points of support and resistance based upon the previous day's highs and lows. There's much more intelligent ways of doing significant levels than pivot points, to be honest. But yeah, there's no harm in using them. Alright guys, well, I'm really glad that went down well, and I hope you all appreciated it. Do send any thoughts through to the Intertrader guys, because they'll be able to give me the feedback and let me set these sessions up for your benefit. Alright guys, well, have a great afternoon, happy pipping. You know my calls on the markets, and it's been an absolute pleasure. Have a great afternoon guys, see you soon.